Welcome everybody to Strategy Now here at MarketStream.live. I am Joe Cusick from the Cusick Group, strategies provided by MoneyBlock. Let's take a look at what's going on in the midday. Actually looking at the futures right now, we have the VIX futures right now, the NOV trading at 18.5, down about $1.22. You also have the Russell 2000, also seeing the Russell, and that's actually showing some leadership right now, up about 1650 at 1170. And the NASDAQ futures, looking at the D's futures, 46.90, currently up 16 bucks. And you have the S&P E-mini futures. They're trading at 2092.75, up about 9.5. And finally, gold. Taking a look at gold, the precious metal is now down $1.20. It has gotten above the 1300 level at 1301 or now 1302, but is a little challenged going into the midday. Also, want to take a look at the Treasury markets. The Treasury markets are showing a little bit of weakness right now. Actually, excuse me, I take that back. I'm taking a look at the 10-year, trading right around 130, and the 30-year trading around 163. So you firmly have the Treasuries still in that safe haven mode going into the election. Speaking about what else is going on, the internals and the breadth right now continue to be on the rise. We're looking at the action the last couple of days. It's been negative. You've been seeing advancers, decliners, and the breadth basically siding more with the bears. While you're seeing that start to shift into the bulls range, this is looking like it's potentially a trend up day, especially after the decent employment number. We're also taking a look at the S&Ps, and a lot of you don't have access to the future, so you can take a look at the SPY, SPY, which is the ETF that tracks the S&P 500. Looks like there was congestion around the 210 area, and that would be about 2100 on the cash, which is the SPX. It looks like if we can get some push through that level, we could see some momentum into the close today. Looks like we might break that 8 consecutive sessions of being down on the S&P 500. Sectors that are pacing to the upside are biotech and pharma. We talked about that this morning in What's Hot Now. Pharma has been under pressure with the recent headlines, the different merger and acquisition, and again with guidance going forward and the uncertainty with what's going to happen with the elections. But boy, you really like to look at stocks when they're beaten up, see if there's an opportunity. There seems to be a lot of oversold names in there. We're going to keep an eye on that sector. Airlines and transports have been to the upside as well today. That's extremely positive when you see transports and you also see small caps and mid caps to the upside. That's where you want to see the leadership. That tells you right then and there that the economy is moving in the right direction if you see health in those sectors and indices. Financials, banks, and brokers, they're all trading very solidly today. There's a lot more conviction with the fact that rates are going to move. You're seeing Fed governors talking about it openly, about there's enough data right now. The employment report was good. We have wage expansion. There are plenty of things on the data front that have been positive. Again, we're just waiting for that election. Lagging sectors continue to be the insurance, basic materials, and energies. Energy still lagging, oil weighing on the market. We're going to continue to see if that holds in. And one thing that you want to look at as far as strategies that you're going to look to deploy going into the election is look at volatility strategies. I talk a lot about volatility. The reason why, that's your forward-looking forecast of potential or expected moves in stocks, the underlying. So saying that, let's put some context around that vernacular that I just threw out there. Really difficult words sometimes for those that are new to the trading and investing world. There are 3 names that I want to cover. They're going to have earnings next week. I think they're well-known names, and so we'll take a look at them. First one is Priceline. PCLN. It's trading right around $1,441. Very expensive stock. Most people don't own 100 shares of Priceline because basically, if you do the math, you're going to have to put up about $144,000. So with that being said, what type of option strategies are you going to look to deploy if you do in fact have Priceline exposure or you're looking to get exposure in your portfolio to price line? Well, first and foremost, what I do is that I look at the implied volatility. It's running at around 58%. Well, what does that mean? Well, in general, that means that if I look at the range of where implied volatility has been over the last 52 weeks, it's at the top end. In other words, it's ranking it at about 98%. So it is very high. Makes sense. We have two binary events that are happening next week in Priceline. You have earnings and you have the election. And those are going to impact the stock. All right. And so with the Priceline implied volatility, running around 78% implied volatility rank, it's pricing in the potential for the stock to move next week about $96, or in other words, a 6% move. So what are we going to do? Well, what I'm going to do is I'm going to look for out-of-the-money calls and out-of-the-money puts that I could potentially sell. And I'm going to do that as a spread. It's called a condor. And the reason why I'm looking at doing a potential condor in Priceline is that I believe that the stock is going to stay basically within a 1 standard deviation move of the underlying. And at this juncture, you're going to be looking at selling the 20 delta calls and the 20 delta puts. That gives you a little cushion there, about 1 standard deviation. For those of you that are new to options, just think of it as saying, okay, I'm selling the right to be either long or short to somebody. Now I'm going to buy options outside of that, and that's going to cover my risk on those two on the sale of those two options. The goal is to collect that premium, because what will happen is after the elections are over and after announcement of the earnings, that volatility is going to get crushed. The goal is that they're going to stay in between the short call and the short put. That's where you want the price action. I see that they're pricing in the potential to for the stock to move about $96, either up or down. It's not directionally biased. So I am not going to sell strikes that are within that $96 range. I'm also going to use the delta to help me determine whether or not I'm choosing the right strikes. So I'm going to be selling probably a 15 to 20 delta call option, and I'm going to buy and a 15 to 20 delta put option. Combine those, that is the net credit. My net risk is the difference between the strike prices, let's say $5, minus the credit received, let's say $2. All right, I have $3 of risk. So that's how I'm going to actually look at setting up some trades going into the election and to earnings. And those are the types of strategic approaches, premium selling, that I want to take. Now, I will say this. I'm going to put a little caveat, warning, red flag. Trade really small if you're going to be deploying capital in this environment. Meaning if you normally trade 100 shares or 200 shares, you're going to trade 50. If you trade in terms of contracts with options, if you trade 3 to 5 contracts, you're going to be trading 1 to 3. This is a very volatile environment. There's a lot of uncertainty. That volatility is going to continue to increase. Once these binary events do occur, that volatility should come out, and it will come out. And that's what we're trying to take advantage of when we're selling premium. I was also going to look at NVIDIA. NVIDIA right now trading at 68.54. The implied volatility is at 90%. And you see that the IV rank is at 97%. They're pricing in the potential to move around $7.32. I'm going to look for a similar strategy in there. And again, I'm not going to be selling strikes as far as the options that I'm going to be doing that are going to be within the range of this, the 75 level and down to, let's say, the 60 level. I'm going to be looking at probably the 80 level and probably the $55 level as far as the option strike prices, somewhere in that range to sell. And that's really right now the strategy now is taking advantage of this implied volatility. But like I've said all week, keep your size small. Make sure that you're managing your current positions more actively going into these binary events. And stay tuned. We're going to be talking about Tech Talk, where we're going to drill down even more than we did here in the midday about these various strategies and what you could expect on the technical side of trading. All right, folks, take care, and we'll talk to you soon.